Hello there. Welcome back to Public Finance N5. In this video, we want to look at Module 2 of Public Finance N5. So we are going to look at guidelines for a democratic financial system. So we're going to start on the origin of a democracy, as we have a statement that we have that is enhancing the explanation of origin of a democracy. So our statement reads Aristotle, a Greek philosopher, came up with the idea of democracy in 3842 322 BC. So we are having the origin of democracy described by Aristotle as a philosopher. So you would also see that Aristotle, as a philosopher, he was an ancient Greek philosopher and polymath. So his writings cover a broad range of subjects spanning from natural sciences to philosophy, economics, politics, and many others. So that's the information that we have in terms of um, Aristotle as a philosopher. So we can see how vital was Aristotle in the determination of guidelines for a democratic financial system. So you would also see that the explanation that we have, obviously, in terms of the democratic financial system, is going to come up as we go with the information that we have according to this video. So moving on to the next part, we are going to look at the Magna Carta and under that it reads that this document depicted the constitutional relationship between the king, the Common Council, and the citizens of England, and was signed by King John of England in Article 15. So basically, this information that we are having here is just giving you a background that you need to know as we look at the guidelines of a democratic financial system. So moving on to the next part, we are having now the American War of Independence, which means that the British government expected the people of America to pay them taxes without giving them any representation in the British Parliament. The American colonists were deeply unhappy about this and led to the American War of Independence. So this is the basis that we have. So moving on to the next part, we have now the French Revolution, whereby it says that the French Revolution was the first large-scale revolution during which the royal family and the aristocracy of France were executed and democratically styled government was put in their place. Since then, the modern world and other communities have sought to fight for a model which closely resembles the one fought for in France. Now we want to look at the 10 democratic principles for public financial management. So obviously, I would want to understand what exactly do we mean by financial management? So you will see that financial management, it is a business function, so it comes as a business function concerned with profitability, expenses, cash, and credit. So those are some of the aspects that are analyzed under financial management. So it manages management and accounting using the financial management cycle. So obviously, we also need to go and try to research in terms of the components of the financial management cycle. So we are given 10 democratic principles for um, public management cycle. So obviously, we are seeing that we've got various of them ranging from 1 to 10. So the first one reads, no tax can be collected from taxpayers without their consent. So basically, this is just explaining that you cannot uh, uh, charge or force a taxpayer to pay a tax without them knowing that something is taking place in terms of the deduction of the amount of tax. So that's the first point that we have there. So if you try to pick another point that is under the 10 democratic principles, we go to uh, uh, point number 8, which is saying the budget programs should satisfy the needs of the public. So basically, we are saying the budget that should be set should be people-centered, as it should satisfy the needs of the public. And if we pick another democratic principle, we go to maybe point number 4. which is saying that the public financial decision making should be elected uh, only elected political representative as the authority to introduce taxes. So basically, this is just giving a guideline in which on which how taxes can be introduced. So, and not everyone is obliged to set taxes, but we know that taxes basically they are set by the government, and the in terms of the local governance, they also enforce the collection of those taxes. So basically, this is what we have according to our democratic principles for public financial management. Then moving on to the next aspect that we have, we see that we are now looking at accountability. So basically, accountability also is also a very important guideline in the financial system. Because accountability, basically, we are talking about the answerability that an individual has. The answerability, we can talk about an individual, an organization, how answerable are you is the accountability. So also you can talk about accountability from the point of view of being liable to something, and also the expectation to be answerable can also describe accountability. So basically, the explanation that we have in terms of accountability reads: each political representative should give full account of his or her activities. In a democracy, officials and representatives are called upon to be accountable for the efficient and effective use of public funds. So obviously, whatever is going to be done in the public space, there should be an element that any individual that is undertaking activities should be answerable on his or her activities. So that's the issue of accountability. So you're going to see that accountability is going to deter many unethical activities that can take place during the spaces of public entities. We can when there is accountability, obviously, the issue of corruption is going to be deterred as an unethical way of doing things. So basically, all the negatives we can think of can be countered by the implementation of accountability. So we move on to the next part, where now we are looking at accounting. Accounting is the mechanism through which our representatives can be accountable to the public. At the end of the financial year, a report on the financial effects of each department activities is compiled. So accountability. So obviously, accounting now as a process now, as a bookkeeping process, obviously it creates the evidence in which cash is being handled among different respects. So if we have got an accounting process being undertaken, it's going to act as a basis or evidence in the way how the maybe the financial activities are being handled. So basically, that's what we have in terms of accounting. So moving on to the next part, you'll see that now we are going to look at financial decision making in a participatory democracy. So obviously, we might also need to understand what actually do we mean by a participatory democracy. So you are going to see that participatory democracy is when citizens participate individually and directly in the political decisions and policies. So the political decisions and policies that they are involved should affect their lives rather than through elected representatives. So basically, we are seeing that the issue of participatory democracy, we are involving the citizens in decision making. We are also involving the citizens in policy making. That is a participatory democracy. So the explanation that we have beneath that, in terms of financial decision making in a participatory democracy, it means most modern governments attempt to implement at least some of the principles of participatory democracy into their ideology. This is done through public meetings, especially on financial matters. So we have been given the basis on which participatory democracy can be exercised in terms of the public meetings, which usually handles financial matters. So that's what we have on that part. Then we can move on to the last part that we have got in this video, which is now on the representatives versus the voters. So obviously, the issue is by allowing the voters to have their say, can be a difficult and time-consuming process. So we are saying for a large a large number of voters that we have, they can have a representative. So that's why we are saying representatives versus voters. So the explanation that we have is representatives are chosen to speak, to make decisions on behalf of their voters, which is direct participation, is difficult and expensive. So we are saying direct in the representatives. So they represent a large group of people. As there are too many voters, the representatives are therefore participants on behalf of the voter. So basically, that's the last part that we've under the module 2 of guidelines for a democratic financial system. So we can stay tuned for more material that are going to come, more material that we are going to bring on this channel concerning public finance and 5. Let's stay tuned, and let's not forget to subscribe and share to our channel. And let's not forget to share the link to our colleagues who are doing financial, who are doing public finance in 5. As for this video, I'm signing out.